Yo guys, it's Kay, and in case you haven't realized, things are going slightly crazy. So I'm just here to explain a bit of the situation. I just want to spread some light on what's going on because I think this is highly important. So first thing I want to say is clearly I am some randomer in VR, an anime character. I have no idea what I'm talking about. I'm not a financial advisor, so please do not take any of this as investment suggestions. Do your own research. So recently, a lot of companies classified as meme stocks, have been shooting up in value. And this has caused a lot of attention, both through normal everyday people as well as the media. And you may be asking yourself, why is this happening? Why are companies like GameStop, BlackBerry, Nokia, all these essentially irrelevant companies just shooting up in value? That's a great question. I just think it's really important to also mention all of these meme stocks, pretty much all of them, are absolutely garbage. People are not buying into them because GameStop has suddenly released a revolutionary business, or BlackBerry's come out with like the BlackBerry Ultra that's about to take a fat dab on the new iPhones or the new Androids. That's not what is happening. These companies are trash. People are buying into them for a completely different reason. Those people would also include myself. And I know my audience, you're like, what? Okay, you've always been like, investing, all these gambling things make no sense. Exactly. I agree. This is why this is also extremely important, because a lot of younger people or new investors are jumping into this having absolutely no concept of what is going on, thinking that this is an investment. This is not an investment. This is more of a, at this point, movement / it's a massive meme. This is literally The Big Short 2, but just like a YouTube version. It's crazy. So, to kind of explain the situation, and again guys, I'm trying to make this video as quickly as possible. I'm trying to create 2 videos today actually. So, there are a bunch of YouTubers that have explained the situation a bunch better than me, but for those that will primarily only listen to me, this is my best explanation. I will also attach links to explain the situation better if you want to know more. Essentially, Wall Street hedge funds have been greedy. I need to explain a couple financial terms to you guys so you start to slowly gather what's going on. There's a concept known as shorting. Okay, when you buy a stock, that's you kind of believing in the stock, hoping that in the future it will be worth more than it is today. That is essentially, in some sense of the word, a long position. You want the company to go up in value. Now, there's also a way to make money when the company goes down in value. That's known as shorting. This concept is best explained if, and again, sorry if I butcher this, your whole goal is to make money while the stock price is going down. So what you do is you go to a brokerage, kind of like Free Trade or Trading 212, which you can't do you can't do with those brokerages, but this is just to kind of explain it, and you will borrow the share of the company that you want to go down at the current price because you think it's going to go down. You buy it, you borrow it at the current price, and then you sell it to somebody else instantly. This is kind of just how it works. Okay, so say, K Industries, I wanted to short my own company for some reason. Okay, K Industries is worth $100. Okay, I borrow it from Free Trade, sell it to somebody else, I've got $100. Okay, in the future, it reduces by 50%. Okay, K Industries is now worth $50, and now I execute that. So now I can sell my $100 stock for the 50, and I've got that difference, so I've made 50 in profit. That's essentially how shorting works, and there's obviously the fees as well attached to it, but that's the whole concept. And it's like, wow, that's amazing. That works so well. Yes, it does when they actually go down. So again, with what I explained, even when you invest normally, there's always a bit of risk. But the biggest risk when you're investing normally is 100% of what you put in. I put a decent amount of my money into Tesla. All of Tesla's factories blow up tomorrow, it goes to zero. The worst thing that can happen, I lose all of my money. When it comes to shorting, however, the potential losses are literally infinite. Because let's use that same scenario. K Industries, instead of going down, because I'm the fantabulous K, instead of going to 50, it goes to 200. It's now doubled. Remember, I borrowed that share from free trade or trading 212. So now I'm out of the money by pretty much, I now owe double of my initial investment. So it's not just the 100 that I paid for, I now have to pay another 100 to actually cover that position, So this is how things can quickly stack up. And this is essentially what hedge funds have done with specific companies, but at an even more alarming rate. With the way that it works, me kind of explaining, okay, for you to short a company, you have to borrow that share. Just thinking about it logically, it should only really be able to go up to 100% short because there's only so many shares of that company available. This is where, things just stop making sense, and somehow these large institutions are allowed to go more than 100% short. I honestly do not know how that works. It just makes no sense. But essentially, these people get too much of a bad name, and honestly, I've been looking through their stuff for a while, and these people, some of them are, let's be real, lots of them are degenerates, but a lot of them are actually really smart. So someone realized, wait a minute, this company is over 100% short. And now there's another concept that I'm going to explain to you, known as a short squeeze. Imagine now I have shorted K Industries by the short position at $50, and it goes up. And with my situation that I said, okay, I now have to cover that short, and I have to buy it at the higher price. Because I'm having to buy it at a higher price, that now raises the stock. So if somebody else also shorted it at just a slightly higher price, they're like, oh crap, my short position is now going a bit sideways. I need to cover my short. So they have to buy in. And then the next person has to buy in. And then the next person has to buy in. And this can cause a stock to rapidly go up in price in this kind of momentumous occasion known as a short squeeze. So these intelligent people and Wall Street Bets used open information that's readily available on the internet to just notice, hey, look at this. This company right here, these greedy hedge funds have shorted this company over 100%. If we buy into this stock and push the price up, they're going to have to cover. And when they do that, the stock price is going to shoot up. That is a general idea of what they're doing. Again, this is being spun in a completely different way in the media. Oh, these Redditors, they're hacking, they're doing all this malicious stuff. No, guys, I've got a degree, or I've got a master's in computer systems engineering. These guys are using free websites to see this information. No one's hacking into companies' databases or doing any of that stuff. So please, other YouTubers, please explain this to your audience as well, because if this starts to get spun in a very negative way, this whole situation will have very negative consequences on normal retail investors like me and you, because we all know how the media like to spin things, and anyone who's following this situation can already see some of the negative things that are happening. So for all you newbies that are jumping in this situation and you're like, okay, can I actually make money in this situation? Should I jump in? No, calm down. Again, this isn't investment advice, but at this point, this is a movement. It's a movement to kind of show these hedge funds that got away in the 2008 financial crisis that, literally just got, it's like slap on the, you caused a massive recession. You caused all these people to go homeless. We'll send one guy to prison, and, we'll just give the rest of you guys billions of dollars. So people are using this as a way to make these people bleed, essentially, because the more that these meme stocks go up, these companies are just doubling down with their short positions, allegedly. And the more the stock goes up, the more money that they're losing. So people are like, you know what, let's get it. And especially with all the false narratives that are also being spread, it's more of a way for retail investors to show that we can organize ourselves and we can learn and invest and make financial decisions just as well as larger institutions. We don't need to have to pick index funds. We can do our own research. Your network is your net worth. That's essentially this whole situation. And hedge funds have used that in the most malicious way for the longest period of time. And now when everyday people like me and you, are using just open chat rooms to just spread this openly free information. They're like, these guys are hacking. They're hackers, guys. You have to listen to me. All you other boomers that will just watch me and not look at any other information. These kids over here, they're hacking at the Financial Conduct Authority. This isn't allowed. Shut down their Discord. Shut down their Reddit. They're not allowed to do this. We've been doing this for years, and it's fine when we do it. But not these stupid kids. That's essentially what it is. Again, this isn't financial advice. There are some people that are not going to listen and still going to jump in. And you know what? Like, the main reason I put money in, I put in a little tiny bit, just to kind of show my support. I'm fully ready for that to go to zero. If you're jumping in on this, do not put in more than 1% or a day's worth of work that you can easily just be like, you know what? So when they make the movie of Big Short 2, when the credits roll down, I know that I should be somewhere in there, or the bit where it shows all the YouTubers or the massive random online retail investors that had no idea what they were doing. You can know that you were one of those people that. So it's just a free ticket for entertainment. Well, no, it's not free ticket. It's something that you pay for, but don't look at it as an investment. Beginners that are jumping in on this like, oh, let me do this. Oh, look at my man making so much money. Oh, he showed his trading 212, or he showed his free trade. And look at all of this stuff that he's making. Guys, if you work hard for your money, when this collapses, it's going to sting. You guys wouldn't rush to Tesco if the prices soared by 200%. So why you guys are suddenly interested in investing while I've been screaming at you guys to invest this entire time when things were so much lower, just think about it in that way. You want to be a long-term investor. A lot of other stocks now are on a discount. If you want to learn investing, I'm happy to help. And loads of other YouTubers are happy to help. The whole point of this video, I'm trying to spread financial literacy. I want you guys to understand what you put your money into. Understand these situations. Your network is your net worth. Do not let the media spin this in a negative way that us spreading information amongst ourselves, legal information that's open to everyone, is a bad thing. This situation is extremely funny, but it also has some serious dark undertones. I normally wouldn't do this, but I'm going to attach one post from Wall Street Bets to kind of show you what people are actually thinking. Yeah, other YouTubers, please, this is kind of important. Make your own videos. Try to understand the situation as best as you can and explain this to your audience. And guys that are jumping in on this, just beware and stay safe. But anyway, it's been your boy K. Please like, subscribe, and remember, subscribing to me will pay dividends to your future. I'll see you guys later. See ya. Bye.